Money FM 89.3. Best of breakfast. The bigger picture, only on Money FM 89.3.
Good morning. Welcome to The Bigger Picture. And we are looking at the Singapore economy. And that's where we've got the latest PMI numbers out from S&P Global Intelligence. So looking at the latest, we've got the private sector expanding at its softest pace in nearly 2 years. So that's one to look at as the reading comes in at 51.5. That's down from 53.9. So let's check in now with Jingyi. She is the Economics Associate Director for S&P Global Market Intelligence. Good morning, Jingyi. How are you doing today?
Good morning, Ryan. On the 6th day, I'm still going to wish you Happy New Year.
Happy New Year to you too, Jingyi. Hope all is well and things are off to a great start. How are things going for Singapore, though, when you look at the latest PMI numbers?
Well, so as you just mentioned, we did see the Singapore, and this is the whole economy number produced by us, covering, well, not just manufacturing, but all the services and all the other sectors that the main sectors for Singapore economy as well. That is showing, as you mentioned, down to 51.5 for the PMI number, and specifically for output, we did see the softest growth in 22 months, almost 2 years over there. Some of the industries seeing a bit of a slowdown to the end of the year, including the likes of construction and consumer services. And this is also, I think, to a large extent owing to the fact that demand has actually stalled for some of this, including manufacturing. I think we are familiar with the global picture for manufacturing as of yet the demand picture isn't too positive right now. So that itself has actually led to more caution, perhaps among businesses. But we did see employment actually falling for the first time since April. And to add to that, I think a lot of the firms themselves are also holding perhaps enough inventories, or they are not too willing to add on to inventories at this point of time, so they're not perhaps purchasing. But with that being said, I think, some of the good news we did see is that, first and foremost, of course, at 51.5, that's still showing growth for the Singapore economy. And it's a long streak compared to what you have among the region. Not to mention as well, I think for the firms as well, they're seeing softening of inflation pressures, which actually bodes well perhaps for demand down the road as well. And last but not least, I would say business confidence, our sentiment index, the future output index, that had actually risen. So confidence has risen back above the long run average. So firms are actually more hopeful that sales can rise in 2025. Despite, of course, we know that the picture itself is a bit uncertain with the new U.S. administration coming in, Ryan.
Yeah. So a lot of things to look at here when you look at PMI numbers. On one hand, we have what seems to be the softest output expansion in almost 2 years. But like you pointed out, it is still above 50, so it's still in expansion mode at 51.5. Where are we when it comes to price pressures? I'm looking at what you describe as selling price inflation easing to a 6-month low. What's going to be happening in the coming year?
Yeah, definitely. So with respect to selling price, that's basically what we're seeing. The firms, the businesses that we've surveyed, charging their firms, their clients. It could be consumers, it could be other businesses as well. So that itself really gives us an early view on how inflation is expected to trend in the coming months. And here we're saying that, the inflation picture isn't perhaps too severe, and it is actually softening, which is positive. Overall, S&P Global Market Intelligence, our forecast for inflation in 2025 is actually expected to ease from 2024 to about 2% level. A lot of this definitely will hinge on what the U.S. tariffs will hold, but generally we're seeing a flat inflation picture going forward.
Yeah, and also in the frame is what we've been looking forward to for some time, with Donald Trump expected to take office on the 20th of January. And there was a lot of talk about how many countries or companies will be front-loading some of their inventory by importing more before tariffs kick in potentially. Are you seeing that right now, looking at numbers?
Yeah, so I would say that if we take a bigger picture, where exactly are we seeing that being most pronounced is perhaps mainland China for the manufacturing sector. In fact, in November itself, we did see a huge jump in terms of demand, in terms of output itself. So a lot of the firms reported that this is due to the front-loading right after the election result was announced and the anticipation of tariffs potentially disrupting trade in 2025. Into December, with the manufacturing number that was out just last week, we did see some of that tapering off a little. but perhaps that's really due to year-end effect as well. We know very soon on the 20th, we know that the new President-elect Donald Trump will be stepping in, and to that extent, there could be more changes coming. In the short term, we still see the likelihood of some of this front-loading to be in place, but just also to note that the broader picture for manufacturing at this point, goods demand, isn't perhaps as strong as what we're seeing for some of the services performance. So don't be surprised that this doesn't really, last for a very extended period. And in fact, with the new administration, that's why we have perhaps concern from the growth aspect to how that could actually impact things.
Yeah, Jingyi, talk about growth. What sort of year are you expecting for Singapore? Because we had the GDP numbers last week, and for the year, 2024 was at 4%, faster than the 1.1% in 2023. But when you zoom into Q4, it grew 4.3% at a slower pace than the prior quarter. So what do you take away from those numbers in terms of where it's going from here?
You're right, and I think you point out a very important point, because 4.3% in the fourth quarter actually beat a lot of estimates by economists, including for us as well. We weren't expecting perhaps such a strong number coming through. But with that being said, certainly that's a slowdown, and we're certainly expecting more of those to actually come for 2025. At present, our real GDP forecast for 2025 is expected to see a slowdown from the advanced estimate of 4% that you just mentioned for 2024 to 2.5% in 2025. Now, what are the factors that really causes us to actually lower that kind of estimates? I would say the number is still very positive. If you look at typical estimates, around about 1.1 to 3% from the government. And if we look at what exactly are some of the factors that are in consideration here, I think one of it is definitely in terms of how the manufacturing picture is going to be evolving. But over and above that, I think some of the uncertainties which PM Huang has actually mentioned as well in the new year is also just pertaining to some of the slowdown that could be seen for trade, especially due to what if the U.S. tariffs will actually be rearranging things potentially in the global scale, and for Asia Pacific as well. Some of the positive effects we might be seeing is a weaker Asian currency due to what's going to happen. That could actually help to bring in some of the trade activities still, but we do not at S&P Global Market Intelligence see that kind of offset to actually bring in growth, but at least in terms of better situation in 2024. I think we've seen a better year already that's past us, but still 2.5%. I think that's the growth we're expecting for Singapore in this year.
Yeah, Jingyi, talk about currency moves. We have been seeing the US dollar strengthen to some degree recently, and we've got Federal Reserve minutes this week alongside non-farm payrolls data. What is going to be your expectations for that, and are we still due for more rate cuts this year?
Definitely. Well, we did see December coming through with, I would say, what's a mixed situation in my personal view. To a large extent, there was a cut coming through from the Fed themselves, but we did see dissent coming through, and importantly, projections from Federal Reserve, which is what they're seeing for the number of rate cuts in 2025, that had actually been lowered as well. S&P Global Market Intelligence, we are expecting 2 rate cuts in the first half of 2025, and thereafter there could be a pause. Why that is the case? Largely, I think we're seeing that potential tariffs actually may keep inflation or bring it back to some extent as well in the new year, and that could actually see to the Fed taking a bit more of a cautious view towards whether they will further cut rates. So I think that's the picture that we're seeing, and we're looking to the minutes to confirm. But importantly, I think, Ryan, you mentioned the payroll stats going to come out. The current consensus for December is that there's expectations for a little bit more of this a lowering in terms of the job addition. 150,000 is what we're seeing for more than 200,000 in the previous month. I would have to add that, we did see from our PMI data that given the positive growth that the businesses are expecting for the U.S. economy in the new year, a lot of the companies have in fact been adding jobs based on what we're seeing in the survey. So if the number should come in a little bit on the higher side, I think that's where we might be a little bit more cautious as the market reacting. So definitely an event risk that I will urge everyone who may be trading to be taking quite a close eye on. the payrolls this Friday.
All right, we'll see if those numbers come in hotter than expected, or will we see a slowdown in terms of jobs creation? We've been in conversation with Jingyi. She's the Economics Associate Director for S&P Global Market Intelligence. Jingyi, thanks for your time this morning and have a great week ahead.
Likewise, have a great year.
Save Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.